Imagine this. You find out that a private company is already worth more than Boeing, Lockheed Martin, and Northrop Grumman combined. A company that has launched more rockets than any government agency in history. A company that is building the infrastructure to put humans on Mars, dominate global internet access, and potentially become the most valuable business ever created by a single human being. Now, imagine someone tells you, you can actually buy a piece of it. Sounds like the investment opportunity of a lifetime, right? But here's the question nobody is actually asking out loud. What if it is a trap? What if the hype, the FOMO, the headline numbers, are hiding something much more dangerous underneath? Welcome back, everyone. This is Ron, and you are watching the channel where we do not just follow the money, we follow the math. If this is your first time here, hit that like button right now and subscribe so you never miss a breakdown like this one. We post every week, and trust me, you are going to want to be here for what is coming. Today, we are doing a deep, honest, and unfiltered financial breakdown of SpaceX. Not the hype, not the fan content, the math. And by the end of this video, you will know exactly whether this so-called opportunity is the greatest investment of your generation or the most beautifully packaged financial trap you have ever seen. Let us get into it. All right, let us start with what we actually know. Because before we can answer whether SpaceX is worth investing in, we need to understand what SpaceX actually is as a business. Because most people get this completely wrong. SpaceX is not just a rocket company. That is like saying Amazon is just a bookstore. SpaceX is currently operating across three massive revenue verticals. You have got the launch business, you have got Starlink, and then you have got the long-term moonshot, and I mean that literally, which is the Mars colonization and deep space infrastructure play. Now let us break each of these down one by one. The launch business, the cash engine. The Falcon 9 rocket is, without question, the most successful orbital rocket in human history. As of right now, SpaceX has conducted well over 300 successful Falcon 9 launches. That is not a typo, over 300, and their reusability track record has fundamentally changed the economics of getting to orbit. Here is the math that most people overlook. Before SpaceX, a commercial launch to low Earth orbit cost somewhere between $150 and $200 million per mission. SpaceX brought that cost down to roughly $67 million per Falcon 9 launch. And with reusability, where the same booster flies 10, 15, even 20 plus times, the marginal cost keeps dropping. But here is where it gets interesting for the investment thesis. SpaceX is not just launching their own stuff. They are the taxi service for the entire space economy. NASA missions, government defense payloads, commercial satellite operators, international customers, all of them are paying SpaceX to get their hardware off this planet. The Falcon Heavy, their heavy lift vehicle, commands even higher prices, ranging from $90 to $150 million per mission, depending on the payload and destination. And then there is Starship. We are going to come back to Starship in a big way, because Starship changes everything about this investment equation. But let us stay focused for now. The launch business alone is estimated to generate somewhere between $3 and $4 billion in annual revenue. That is a real business. That is cash flow. That is the foundation that everything else is being built on top of. Starlink, the real money machine. Now here is where the investment thesis gets wild, and where most retail investors are completely missing the story. Starlink is SpaceX's satellite internet constellation, and right now, it has over 6,000 satellites in orbit. 6,000. And they are not slowing down. The long-term plan calls for tens of thousands of satellites, potentially up to 42,000, creating a truly global broadband network that can reach every corner of the Earth. As of the latest estimates, Starlink has surpassed 3 million active subscribers worldwide, and they are growing fast in underserved markets. Rural America, remote parts of Africa, Latin America, maritime shipping, aviation, military applications. The total addressable market here is genuinely enormous. Now let us do the math, because this is the honest math channel. Residential Starlink costs roughly $120 per month in the United States. If you take 3 million subscribers at $120 per month, That is $360 million per month in recurring subscription revenue. That is $4.3 billion per year. And that number is growing. But wait, add in business Starlink, which runs anywhere from $250 to $500 per month. Add in Starlink Maritime and Aviation, which are running $5,000 to $25,000 per month for enterprise customers. And then factor in the military contracts, because the United States military is already paying SpaceX hundreds of millions of dollars for Starlink access, and multiple other governments are coming online. Conservative analysts are projecting Starlink revenues to hit $10 billion annually within the next 3 to 5 years. Some of the more aggressive projections, especially if aviation and maritime adoption accelerates, put Starlink revenue at $20 to $30 billion by 2030. Let that sink in for a second. One subsidiary of SpaceX could generate more revenue than the entire traditional commercial launch market. This is why when analysts try to value SpaceX, the Starlink business alone, valued as a standalone entity using comparable software and subscription business multiples, is worth somewhere between $80 and $150 billion. The valuation problem, where the trap starts to appear here, is where we need to slow down and get very precise. Because this is where the trap starts to reveal itself. SpaceX's last private funding rounds valued the company at approximately $180 billion. Some secondary market transactions have put the implied valuation even higher, closer to $200 billion. Now, let me give you some context for what $180 to $200 billion actually means. At $200 billion, SpaceX would be valued roughly the same as Goldman Sachs, the same as General Electric. It would be in the top tier of the most valuable companies on the entire planet. As a private company that has never publicly disclosed its full financial statements. And here is the critical question the honest math forces us to ask. Does the current business actually justify a $200 billion valuation? Let us do the math. If SpaceX generates roughly $8 to $9 billion in total revenue today, combining launch services and Starlink, and we assume a generous revenue multiple of 20 times, which is what you would give a high-growth, high-margin tech company, you get a valuation of $160 to $180 billion. On revenue multiples alone, the valuation is actually not totally insane. It is aggressive, but it is not in bubble territory if the growth thesis holds. But here is where it gets complicated. SpaceX is still burning cash. Starship development has cost billions of dollars. The satellite constellation requires continuous launches to maintain and expand. Capital expenditures are enormous. The company has taken on significant debt and has conducted multiple funding rounds to keep the machine running. We do not know SpaceX's exact profit margins because they are private. But from what has leaked out through SEC filings, investor presentations, and investigative reporting, SpaceX is almost certainly not yet profitable on a net basis when you account for Starship development costs. So you are buying a company that is generating significant revenue, growing quickly, burning significant capital, and is valued at $200 billion. That means you are essentially betting that all the future value, the Starship revenue, the fully expanded Starlink constellation, the Mars infrastructure, the point-to-point Earth travel business, that all of it materializes and that SpaceX captures the economics of it. That is a lot of assumptions baked into the price. How do you actually invest in SpaceX? Now, here is another layer of the trap that almost nobody talks about enough. And it is the access problem. SpaceX is private. You cannot just open your Robinhood app and buy SpaceX stock. It does not trade on the NYSE. It does not trade on NASDAQ. So how do regular investors actually get exposure? There are a few paths, and each one comes with its own risks and caveats. Number 1. Indirect exposure through public companies. This is the most accessible option. Companies like Alphabet, Google's parent company, have invested directly in SpaceX and hold equity stakes. There are also publicly traded companies that are suppliers, customers, or partners of SpaceX. Companies involved in satellite manufacturing, ground station equipment, or launch support services. But here is the honest disclaimer. Your exposure through these companies is diluted, indirect, and small. You are not really investing in SpaceX. You are investing in companies that touch SpaceX. Number 2, SpaceX tender offers and secondary markets. SpaceX periodically opens what are called tender offers, opportunities for employees and early investors to sell their shares. And there are secondary market platforms like Forge Global, EquityZen, and Carta that facilitate private share sales. However, and this is a big however, these platforms typically require you to be an accredited investor. In the United States, that means a net worth of over $1 million, excluding your primary residence or income exceeding $200,000 per year. And minimum investment sizes are often $50,000 to $100,000 or more. This is not retail investing. This is high net worth territory. Number 3, SpaceX-focused funds and SPVs. Some venture capital funds and special purpose vehicles have been created specifically to pool accredited investor capital and buy SpaceX shares on the secondary market. Again, accredited investor requirements apply, the fees are high, and there is very limited liquidity. Number 4, waiting for an IPO. SpaceX has been rumored for years to potentially spin off Starlink as a publicly traded company. Elon Musk has mentioned this possibility multiple times. If Starlink goes public, regular investors could buy shares in what is likely the most valuable part of the SpaceX empire. But there is no guaranteed timeline for this. It could be 1 year from now. It could be 5 years from now. It might never happen. So the access problem is real. For the vast majority of individual investors watching this video, direct SpaceX investment is not on the table. Full stop. The Elon factor and why it matters more than people admit. We cannot do an honest analysis of SpaceX without talking directly about Elon Musk, because Elon Musk is not just the CEO of SpaceX. He is the founding vision, the technical brain, the fundraising engine, and the brand of SpaceX rolled into one human being. And right now, Elon Musk is also the CEO of Tesla, the owner of X, the founder of XAI, and deeply involved in political and government activities. He is, by any measure, spread thin. Now, some people will say that Musk's track record speaks for itself, and they are right. The man has built multiple multi-billion-dollar companies from scratch. Tesla, SpaceX, PayPal before that. His ability to attract talent, capital, and execute on seemingly impossible technical challenges is genuinely unprecedented in the modern business era. But here is the honest risk factor. SpaceX's valuation and growth trajectory are intimately tied to Elon Musk being present, focused, motivated, and healthy. Key man risk, that is the official term for this, is one of the most significant financial risks embedded in SpaceX as an investment. If something happens to Musk, if he shifts his focus dramatically to other ventures, if his public profile creates political or regulatory backlash that affects SpaceX contracts, these are all real risks that the current valuation may not be adequately pricing in. And there is another piece to this. A significant portion of SpaceX's government revenue, NASA contracts, Department of Defense contracts, depends on good relationships with those agencies. SpaceX has, at various points, been in tension with NASA over contract decisions and with the FAA over launch licensing. The political environment around Musk is more complicated now than it has ever been. That creates regulatory risk that did not exist to the same degree 5 years ago. This is not an argument that SpaceX fails. This is an argument that the risk profile is more complex than the hype suggests. Starship. The make-or-break variable. Let us talk about Starship, because if you want to understand the full bull case for SpaceX, it lives and dies with Starship. Starship is the fully reusable, super heavy lift launch system that SpaceX is developing. When fully operational, it is designed to carry over 100 metric tons to low Earth orbit per launch, more than any rocket ever built, at a marginal cost that SpaceX has suggested could eventually drop to $1 million or less per launch. Let me repeat that. They are talking about getting the cost of putting 100 tons into space down to $1 million per flight. That is a 99% cost reduction compared to legacy rockets. If that happens, it does not just change SpaceX's economics. It changes the entire space economy. Starship makes cheap satellite deployment possible. It makes lunar surface missions economically viable. It enables the Mars colonization timeline Musk has been talking about for 2 decades. It enables point-to-point Earth travel. Imagine flying from New York to Tokyo in under an hour via a suborbital trajectory. The total addressable market for Starship, if it fully delivers on its promise, is measured in trillions of dollars. Not billions, trillions. But here is the honest math part. We are not there yet. Starship has had successful test flights, absolutely incredible engineering milestones, but it is not yet operational. It is not yet flying paying customers. It is not yet at the launch cadence required to drive down marginal costs to the numbers Musk talks about. There is still significant technical risk. There is still regulatory risk. There is still execution risk over what could be a 5 to 10 year development and ramp-up timeline. So, if you are buying SpaceX at a $200 billion valuation, a significant portion of that value is Starship optionality. You are paying today for something that might fully materialize in 2030 or 2032 or later. And in investment terms, the further out into the future the cash flows are, the more you should be discounting them, and the more uncertainty you should be building into your model. The competition. Is SpaceX actually safe? One more piece of the honest math. Competition. SpaceX currently has a commanding lead in the commercial launch market, but that lead is being challenged from multiple directions. United Launch Alliance, the Boeing and Lockheed Martin joint venture, is developing the Vulcan Centaur rocket. Blue Origin, Jeff Bezos' company, is developing the New Glenn rocket and is investing billions into catching up. Rocket Lab is carving out the small satellite market aggressively. And then internationally, you have China's commercial space sector growing rapidly, with companies like Landspace and Space Pioneer making genuine technical progress. In the long run, launch is going to commoditize. When multiple providers can put payloads into orbit cheaply and reliably, pricing power in the launch market will compress. SpaceX's moat in launch is real today. Whether it remains impenetrable in a world where Starship has proved out reusability and competitors have caught up on their own reusability programs, that is a genuinely open question. The Starlink moat is stronger in the near term. First mover advantage, scale of the constellation, already established partnerships with telecom companies and governments. But Amazon's Project Kuiper is coming. They have already started launching satellites and have billions of dollars of Amazon's balance sheet behind them. Competition in satellite internet is coming. Maybe not as soon as optimists hope, but it is coming. So, is it actually a trap? The honest verdict. Let us bring all of this together and give you the honest answer. SpaceX is not a scam. It is not a Ponzi scheme. It is not vaporware. This is a real company with real revenue, real customers, real technical achievements, and a genuine possibility of becoming one of the most transformational businesses in human history. But, and this is a very big but, at the current valuation, you are buying into a company where the majority of the value depends on Starship fully delivering on its cost reduction promise, Starlink growing to tens of millions of subscribers without catastrophic competition eating the market, Elon Musk remaining focused, healthy, and politically viable as a government contractor, the regulatory environment staying broadly favorable, a timeline of 5 to 10 or more years for the biggest value drivers to fully materialize. If you are an accredited investor with a high risk tolerance, a long time horizon, and you are allocating only a small portion of a diversified portfolio, SpaceX exposure at current valuations can potentially be justified as a high-conviction speculative bet. If you are a regular retail investor who does not meet the accredited investor requirements, the honest answer is that you cannot meaningfully access SpaceX anyway, so the question is mostly academic for you. Your best option is to watch for a Starlink IPO and consider small indirect positions through public companies with SpaceX exposure. If you are thinking about concentrating a large portion of your net worth into SpaceX through secondary markets or funds, I would caution you strongly. The risk-reward at a $200 billion valuation with this level of uncertainty and illiquidity is not favorable for the average investor, even if the long-term story is compelling. The trap is not that SpaceX will fail. The trap is overpaying for a great story at the wrong valuation and being locked into an illiquid position that takes a decade to potentially prove out. Great companies can still be bad investments if you buy them at the wrong price. And right now, the math demands serious caution. So there you have it, the honest math on SpaceX. Incredible company, generational technology, real business fundamentals underneath all the hype. But also, significant keyman risk, massive execution uncertainty on Starship, growing competition in satellite internet, limited access for retail investors, and a valuation that is pricing in a lot of things that have not happened yet. The verdict? The opportunity is real. The risk is also real. And for most people watching this video right now, the trap is not the company itself. The trap is letting the excitement override the math. Always follow the math, not the hype, not the Twitter posts, not the YouTube thumbnails, including this one. If you learned something today, do me a favor and smash that like button. It genuinely helps this channel grow and helps more people find content like this. Subscribe if you have not already, and hit the notification bell so you know the moment our next breakdown drops. Until next time, this is Ron, reminding you that in investing, the most dangerous 4 words are, but the story sounds amazing. Stay sharp, stay disciplined, and I will see you in the next one.